Hello everybody, my name is Rainer and welcome back to this week's market analysis. So this week, what we had, was the FOMC, which we saw massive volatility across the board, right? So basically the Forex majors, we saw huge spike, huge movement and huge retracement across most of these majors. And I'd like to share with you my input on what I think will happen in the dollar in the coming weeks. Also, I got stopped up. Personally, I got stopped up on most of my long dollar positions. So another incentive for me to share on what I think of the dollar, as well as, cover a couple of other products, namely the DAX, as well as the 30-year treasury.
So this is the 4-hour chart of the euro dollar. And, looking at this chart, let's see where FOMC news occurred. So this was the spike up when FOMC news came out. Then after which you see the, price sell down once more. Then we saw another buy up again. So most traders will look at this forward chart on the euro dollar and think they'll probably have, have doubts, what is the trend of euro dollar right now? Looking at this chart, is it in an uptrend or is it in a downtrend? All right, uptrend because we have broke a new high over here. Then we had the higher lows over here. But then traders will look towards the left over here and see, but we have a bunch of lower highs and lower lows over here. So what is the trend of the euro dollar? All right, so when usually I encounter situation or scenarios like this, I will always do one thing, which is this: go up to the higher time frame and get a bigger picture, a bigger clue. Right? So now that I'm on the daily chart, things become much more clearer, isn't it? Because previously on the forward chart, look, price was in a mess. It spiked up, it spiked down, then it go back up once more, and it gets many traders confused. Don't know what's the trend on it. So what I usually do is again go up one time frame higher and see a bigger and clearer picture. And on the daily chart of the euro dollar, it's much more clearer now that the trend is still intact. The downtrend is still there, right? No reason to get overly bullish because overall we see price making lower lows and lower highs. All right. See, we have lower highs over here, over here, over here, over here, over here, and the most recent one over here. When FOMC caused this spike up, and if you notice, all right, price is still respecting both the 20 and 50 period moving average. 20 is period moving average is the red color line, and 50 is the blue color line, and you can see this zone over here. Price still clearly respect this zone. And if you ask me, what's my take on euro dollar? For me, it's still, bearish towards the downside in the longer term. And for traders, who actually trades on the daily chart, I would say trading opportunity will lies when price retest back this 20 period moving average over here, which it did during the FOMC. And I'm not sure if you went short, right? I didn't really post it out in advance, but I would say looking on hindsight now, the 20 period moving average clearly, has some significance on the euro dollar. And if you ask me, when would the trend change? Honestly, I'll still stay bearish until the 50 period moving average gets taken out, meaning price trades above the 50 period moving average. Then I'll reevaluate once more. So again, longer term trend for me, euro dollar is still bearish, and that's something to share with you guys. Now next, let's look at the pound dollar. Again, similar story. You look at this chart. Again, it gets most traders confused. So Rainer is the trend up or down on this forward chart. And then they'll look at, we have this massive spike up, taking out a lot of, stops, taking out the recent highs. Then we have another sell down back. Then we have another buy up once more. Then traders will say, there's a higher low over here. Then we have a higher high over here. But looking left, the trend here is still down. So what do we do? All right? When you always face such situation like this, all right, go up 1 or 2 time frame higher to get a clearer picture. So going on to the daily chart now. Is the trend much clearer down here? Sure it is, right? Just look at this, it's clearly in the downtrend over the longer term, right? Price is still respecting this 20 and 50 period moving average, all right? We had this false breakout once, then price went back down, and right now, seems to be consolidating between here and here. So again, always look at the big picture. When in doubt, especially on the lower time frames, you are, clueless. You do not know what the market is doing. You do not know what's the trend. Go up 1 or 2 time frame higher. You get a bigger picture, a bird's eye view of what the market is doing, and that helps to clear your thoughts. Take a step back and to see what is the price action over the longer term, which I think is very beneficial for all traders out there. No matter what trading system you use, alright, it always pays well, to look at a higher time frame. So yeah, that's the pound dollar as well. And if you look at the other majors, right, they all similarly all sing the same tune, right? Very messy on the forward chart, but if you go to the daily, the weekly chart, price action becomes much more clearer. Now next, we'll look at a crude oil. again, right, same tune, right? The forward chart, or it's not as bad as the other majors, the currency majors, but still similar story. And if you look at it on the daily chart, last week I mentioned that I said that price will probably come down and retest this low over here, which it did before rallying up higher. And I also personally got stopped out of crude oil on this forward chart. Last week I said that I was waiting for a flag pattern or some sort of, so I got it over here, right? This pattern here. Then price came down. Here I got triggered my sell stop. Price traded lower. FOMC came up here and I got stopped out. So I think I was up about 1.5 R, right? I did not adjust my stops. It wasn't set to break even. I simply left it where it was originally set. Then I got stopped out for a loss of 1 R. So that's trading for you, I mean, I get this a lot of time, I get this, up 1.5 R, up 2 R, up 3 R, and price retrace back and stop me out for a loss of 1 R, right? And the reason being is because I was simply letting my trades run. So I wasn't too micromanaging on my trades, I simply let the market decides before I adjust my stops accordingly. And this is what happens, and this explains why my win rate is actually pretty low, around 30% I would say. But because of this fact that I was willing to let my trades run, this actually gives me the ability to catch bigger moves in the market, the 1 to 50 risk to reward, the 1 to 45, this makes it possible because I let my trades run. So just something to share with you, don't get disheartened if you have trades moving in your direction, up about 2R, then it goes back down and stop you up for a loss of 1 R. Because when this happens, a lot of traders get frustrated. They feel that they are giving profits back to the market. They feel that they are stupid, they are silly. Why we have money in your pocket? You let the market take it away from you. So honestly, I think these are all really negative thoughts. Because the main thing is you have a trading plan, and your trading plan will tell you what to do at all times. What to do in contingency A, what you do in contingency B. It basically has a plan that gets you covered no matter what the market does to you. And this is my trading plan, and I'm perfectly comfortable, having 2-3 R in profits before stopping me out for a loss of 1 R, because I know this is simply the cost of doing business, alright? I know that, if I do this kind of trades long enough, maybe 100 or 200 trades, there will be bound to be trades whereby, it doesn't stop me out and went on further to give me the huge risk to reward, the 1 to 40 and 1 to 50 risk to reward. And these are simply the cost of doing business, alright? You have to accept this psychologically. You have to accept this fact, and only then, could you really be comfortable in executing the trend following approach in trading the markets. So yep, that's something to share with you. And next, we'll look at this market, DAX. So look at DAX, right? It's definitely one of the most bullish, if not the most bullish indices out there. You look at how many weeks it has been trading higher. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks of higher prices on DAX. And I'm not sure about you, man, but I wouldn't even want to think about shorting these markets. Just look at the historical price action of DAX. It has been trading 10 weeks in a row higher. And I'm not sure whether you think, on the 11 week, maybe price will sell down. All right, because I'm sure not thinking along this line. I'm thinking on where to long and where to get long on DAX. Because, just because price has been trading 10 weeks higher doesn't mean it couldn't trade for another, 20 or 30 weeks higher. I mean, it's possible, So why want to fight against the trend? So for DAX, again, we see very strong bullish momentum over the last 10 weeks over here. And no doubt that, most trend followers are already long. But personally, I'm not long yet, right? I did miss a couple of trades on DAX. So let's look at where we can find trading opportunities on DAX. Right, looking at the daily chart, price is still supported by this 20-period moving average over here. And on the forward chart, now we have something down here on the forward chart. So on DAX, the forward chart, you see that, price has been respecting, right, this 20 and 50-period moving average once more. And I think the most recent entry that if you did trade would be over here, right, getting long in between this zone. I didn't get long personally, but what happens if next week, price come back and retest this low over here? So opportunity to get long. Likewise for traders, who trades breakout, price trading above this high again, could potentially be another breakout entry towards the upside. So that's for DAX for you. And up next, let's look at the 30-year Treasury. 30-year Treasury, right? Very interesting market, and I think a market that not many traders look at, right? Especially if you're a forex trader, you don't really look at the Treasury, you don't really look at the other markets besides the currency. But I would say, I look at all markets because I don't classify myself as a forex trader, but rather I'm a trend follower. I trade all markets, and as long as there's, interesting move or move that fit my criteria, I have no qualms about trading those markets. So looking at the 30-year Treasury, we see that, price is actually pretty volatile over the last month or so, right? Between this high and this low, right? We saw this sell down over here. And in 2 candles, we saw this buy up over here. So it's like what the market is doing, man. I mean, it sells down and it buys up, It's very confusing, right? Look at this chart, right? Definitely looks confusing to me as well. But one thing I can agree is that, we have a series of higher highs. Here, 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 and here. So next stop, you'll probably look to test this multi-year highs over here. So personally, my bias for this 30-year treasury is long bias. And looking at the daily chart, again, we see this strong bullish momentum towards the upside as well. Probably looking to test this multi-year highs over here. So where can we look to trade this market? Again, on the forward chart, we see price respecting the 20-period moving average once more. And again, a similar story as the DAX. Any retracement back towards here, right? The 20 EMA or this swing low over here are potential long opportunities. And I would say, I'm sure you know that, we are going to long into a potential resistance. And I have no issues going long into resistance or short into support. Mainly because, if I'm wrong, I'll stop out with a loss of 1R. But if I'm right, what if the resistance really does break, price trades higher? For me, it's an infinite R if you ask me. So to me, it's a very favorable risk to reward. I don't really pay much attention to support or resistance. Okay, I do pay attention to them, but I don't use them in a way that most traders use them. Most traders use them to, spot reversals in the market when the market may potentially reverse from there. For me, I usually identify them and I look to trade against most traders out there who look to trade support and resistance, right? So most traders, for example, we saw example on this 30-year treasury, we saw that price is coming up into this potential multi-year resistance over here. Most traders will look to get short over here, get their stops above this high over here. For me, if price consolidate, I'll be looking to trade the breakout towards the upside, alright? So I'm basically challenging against these traders who got short and placing their stops over here. And as for me, I'm trading the breakup towards the upside and my stops is over here. So who will win, who will lose? Honestly, I can't predict who will win or who will lose. All I know is that, if I lose, I'll get stopped out for a loss of 1R. But if I'm right, price does trade higher, break off the resistance, does trade up higher, my risk to reward is, I would say, is pretty tremendous. So again, there's no right or wrong here, but that's my take on trend following. That's how I do it. And just something to share with you guys, alright? So I hope you guys find this video useful. That's all I have for you guys this week. And if there's anything, you can feel free to subscribe to this video on the link below. And anything, comments, feel free to leave it on my website or my YouTube video. And I'll talk to you soon.